Hello guys, welcome to Brown's FX. So let me show you guys how candle range theory CRT strategy works and how simple it is and how it works. So what do we need? We need a 4-hour time frame and a 15-minute time frame. What we do on a 4-hour time frame? On a 4-hour time frame, we look for a candle, a huge candle, a market makers to move upwards. Like we need a big candle where there is no liquidity sweep or anything. We wait for a market to sweep a liquidity, then we execute trade. Let me show you guys. Let me remove everything. As you can see this, the market how it moves down. So let's go on a 4-hour time frame first. So once we are on a 4-hour time frame, what do I mean by a huge candle of movement from the market makers? As you can see, we had this candle with a huge drop, So once we have a candle with this huge drop, there is always the market is going to go below or it's going to go above. So the market makers are going to take that to sweep that liquidity. So we look for a huge candle as this one. So we had this huge candle on a 4-hour time frame. We just look the 4-hour time frame thing. It's only to look for a huge candle. So this was our huge candle. So this is called our CRT high and our CRT low with the 50% of the candle. So once we get our huge candle on a 4-hour time frame, we draw our high and low and a bottom, because the bottom is our take profit one. So once we get this, we go to the 15-minute time frame. Once we get our candle, we go to the 15-minute time frame. As you can see, we are on a 15-minute time frame. So everything happens on 15-minute time frame. Everything. Let me just move back. So what do we look on a 15-minute time frame? On a 15-minute time frame, first of all, we look for an order block of fair value gap on the 15-minute time frame. So we had this order block. Okay, we had this order block, as you can see. Then we also had on a fair value gap below that order block. Yeah guys, we had these two things. Let me just change the color. Let me just change it to green. Okay, so we had the fair value gap and an order block. So we need a candle to come and touch our fair value gap on an order block and close below our CRT. Okay guys, so as you can see, the market touched our order block and it touched also our fair value gap. So once we have that thing with the close below, once it maybe we can even there is not a problem even if the candle has closed above, will close above and come down. So we just look for a candle which closed above or which went up and came down. So this was the candle which closed above and touched our fair value given an order block. So this becomes our order block to execute trades. So what do we do next? The next thing is we use our Fibonacci retracement. We wait for the market to come down. So we put our Fibonacci and it must come to our golden zone. If it doesn't come and goes down, we move below. Then we wait for it to come at our golden zone. Let me show you what I mean. So as you can see, we had this candle, so it came down. Let me just change it to our golden zone. Yeah guys, so there is our golden zone. So the market came at this point, but did it touch our golden zone? No, we don't execute trade, but it went down more. So we come at this point. Now at this point, did the market touched our golden zone? Yeah guys, the market did touched our golden zone. So we execute trade at our golden zone. Our golden zone is at this point guys. Let me just change it to red. So that's our golden zone. As the market touches our golden zone, we execute our sell trades. So So we took our sell at this point. Our stop loss is at our what do you call, at our high of our golden zone. That's our stop loss, and our take profit one is at the 50%, and take profit two is our at the CRT low, guys. Check how the market is moving, guys. Check check how it's moving. Check, guys. Check. It's still moving downwards, guys. 1:7 risk reward ratio, guys. So this strategy, it's very simple, guys. It's a 4 hour and 15-minute time frame. A candle and a 4 hour time frame, a higher time from where the market make a huge movement. Then we draw the high and a low of that candle. Then we go to the 15-minute time frame. Then we wait for the market to get a liquidity sweep of that market, or go and touch it our order block in a fair value gap. Then wait for it to come down. Then use the Fibonacci retracement. Wait for the market to come at the golden zone. Then you execute your trade, guys. This is the simplest and the easiest money making strategy, guys. Try on a demo account and see what happens, guys. Thank you for watching. This is Usdjpy strategy, analysis with CRT with Brown's effects.